Hi, it's Stephanie Evelo here with the Evelo team at Keller Realty, and I am so excited. I hope everybody's ready for this holiday season, and as you can see, we are. I have with me today Bob Werner, one of our senior specialists for the Evelo team, and today we're going to review what happened in the local market here in November of 2022. Since the data that we receive is always 30 days behind, but this will give you an idea of what the last 30 days have looked like. So, Bob, start us out. What happened in the local housing market in November?
Absolutely. Well, hopefully you're not too distracted by the craziness of all my daughter's Christmas get-ups, but we are celebrating the holidays here this week. But we'll get down to business and talk a little bit about what the markets look like over the last 30 days. So first couple of slides up, again, data is for the month ending November. That median sales price ended at 273. That was down a little bit month over month from October. But that still was up 9.2% over that time last year at 250. So still seeing some increases there. That decline, as you can see over the previous years, is kind of that seasonality decline. So we'll see where that lands next year. But right now, certainly not expecting the same level of growth that we had the last couple of years. Still expecting some growth, but we think we'll see that lower a little bit. Next up is that kind of median days on market. So this is kind of some of the first signs that the market's changing a little bit. So we went from 12 days last month to 18 days this month. So that's up 50%. And at this time last year, we were down at 6 days. So that's up 200%. So pretty significant change there. Next up, we say that amount of inventory or that month's supply of inventory or absorption rate. So another metric to track, right? The higher that is, the more balanced the market becomes. So balanced market being about a 4 to 6 month supply of inventory. For November, we were at 1.7%, which was up a little bit over last month, but up more than double where we were at this time last year over year. And then this last one here in this bit is the percent of list price received. So we got pretty high over the summer. We were up near 104% of list price received in the height of the summer, down to 97.9% right now.
And so we see the market cooling, but what are some of the specific metrics that you've been following to track this shifting market?
So for the last couple of months, we've kind of looked at a couple of additional slides other than the ones that we just went over. They kind of point a little bit more to the little bit of softness that's beginning in the market. The first one up is that active inventory. So if you go back here on this chart, again, keeping in mind this looks back 5 years. So back in the summer of 2017, we had almost 9,000 active listings. For the better part of the last couple of years, we fluctuated more under 2,000. At this time last year, we were at 2662. For the month ending November, we were at 4666. So while it's down a little bit from October, pretty significant increase over last year at 75%. So as those homes stay on the market a little bit longer and the number of listings continues to dwindle, we'll have more homes active, right? Next up, you'll see this chart's a little bit more crazy, lots of ups and downs and peaks and valleys each year. We certainly sell more homes in our market from March to August of each year, which is where these high peaks and valleys are. But still some good data here. So the number of closed sales overall at 2709 is down 9% over last month. And that's down 27% over last year. So we're seeing those number of monthly closings decrease. And then the last one up here, which again is a pretty good indication of where the market's headed, you'll see this huge spike in the number of price increases from where we were at the beginning of the year to at just a little bit over 500 to this last month. We had almost 2,500 price changes or price reductions. So that's up almost 81% year over year. So those are the kind of the three key things that we've been looking at for the last couple months to kind of see, hey, yeah, we all know it's shifting, but there certainly are differences between what does that shift look like in Indianapolis versus what does it look like in Manhattan, or what does it look like in Los Angeles, or what does it look like in Orlando, Florida?
Yeah, and of course it's all relative, right? Because I've seen it at a time in the market where there were 19,000 homes for sale in the market.
Right.
So, seeing over 4,600, that's still super low in relation to, and yet it's a positive sign for buyers, right? Because then we've got more opportunity, more inventory out there for them to look at and see. So all those buyers who have been kind of sitting on the fence and waiting to find the right house, now may be the best time, because now there's more inventory to actually go out and see and look and find. And you see back on the other stats that it's not selling at 100%, right, of asking
Absolutely.
price.
Yeah.
There's actually some negotiation there. So yeah, those are good signs for buyers. So any final thoughts about the state of the market?
We'll cover the interest rates really quick first. We've taken a look at those each month. So we actually have gone back down a little bit from where we were last month. So last month we were a little bit over 7% on the average interest rate. And for the week ending last week, we had taken a dip on that down to 6.31. That obviously is still quite a bit higher, about 2.8% than what we were at the beginning of the year. But we had several weeks, even a couple months there where we were above 7. So good to see it go back down under 7. Hopefully that trend will continue. And then to your point, just kind of, the state of the market overall as we sit in December, near the end of December, and looking at the start of 2023, definitely in 2022, right? The housing market's been defined by 2 key things, right? Inflation and rapidly rising interest rates. It was actually the first time in history that the interest rates more than doubled in a single calendar year. So that was a pretty significant one-time event that we've never seen in the history of mortgage interest rates before. And so, looking out to 2023, really the market's going to be defined by inflation, right? And then what happens to the interest rates as a result of that inflation. So that's kind of our initial outlook for 2023. Obviously, we're here every month to kind of give the latest and most up-to-date market information specific to our locale. So, stay tuned for these monthly updates, but those will definitely be the 2 key drivers as to what happens in 2023.
Yeah, well, thank you so much, Bob. Always. Thank you so much for sharing these monthly and doing all the research for us to be prepared to share this information out with our friends and family and those that we care most about. So thank you. Appreciate that. And thank you so much for joining us today. And if you have a real estate need that we can assist with, let's connect. You can contact us at info@eveloteam.com or 317-863-9011. And all this will be here in the post. Thanks so much for joining us. Make each moment count and have a Merry Christmas.
Merry Christmas.
Bye-bye.